Hi, today we're going to be covering balance sheets. Our group is consisted of me, Tanner Flynn.
I'm Jean Park.
I'm Rob St. Pierre.
My name is Max. In this part, I will introduce the balance sheet. The balance sheet is a summary of a business activity at a given point in time. The balance sheet shows us the assets, liabilities, and the equity in a company. The assets are items of value, like cash and land. Liabilities are debit obligations, like accounts payable. The ownership equity is defined as the claim on assets. The balance sheet is going to be more interesting to owners, bankers, investors, and those who are interested in buying a business.
Okay, now we're actually going to be looking at what a balance sheet actually looks like and what is all covered in a balance sheet. As you see here, in a balance sheet, there's assets, liabilities, and equity, or liabilities and stockholders' equity. Breaking down the assets, assets are divided in either current or fixed assets. There are current assets up here, and all the fixed assets are down here. What deems a current asset is if it's easy to be transformed into cash. So, for example, all current assets are going to be any accounts receivable, inventory, cash, or any prepaid expense, or any marketable securities. So, as you see here up top, this is why all four of these items fall into the current assets. And below that, where property, equipment, goodwill, and other assets are all fixed assets. They both apply to the balance sheet and are added together to find the total asset, but there will be problems or situations where you're only want to look at the current assets, and this is where you will be able to find them by adding up the cash, accounts receivable, inventory, and prepaid expenses.
Hi, so I will be talking about liabilities. There are two parts. So just like assets, liabilities refers to the debts of the company. It's separated into short and long term. Short is also referring to current, and it includes the money immediately owed by the company. Whereas long-term debt includes debts that typically take over a year to pay back. For example, mortgages, long-term loans, large sums of money that have been used to invest into the company. Current liabilities include bills, so account payable, money still that must be paid. It can include a service or product that has been purchased and they're just waiting to pay for it. Other current liabilities include wages payable, so hours worked that have yet to be paid, taxes payable, interest payable. Stockholder equity includes common stock, retained earnings, additional paid-in capital, less treasury stock, and then you will be able to get the total stockholders' equity. And this will show, stockholders' equity shows how the business is financed. So stock refers to the money invested, and retained earnings refers to the profit that the company has produced from their business operations. It's important to analyze this because you're able to see the equity situation of the company, specifically the ratio between stock and money received from the operations will show whether the company is in good standing. In this balance sheet for Amazon, we're able to see that they're in fairly good shape. So we're able to see a snapshot at a given time when looking at this ratio, but to see a larger picture of the situation, it's better to do a horizontal and vertical analysis.
Hello. In this section of the balance sheet, I will be covering the main equations involved with the balance sheet. So the first one is at the top, and it's kind of like the general overview of all the other three at the bottom. So the first one is assets equals liabilities plus ownership equity. And the following three are assets minus liabilities equal ownership equity. The second one is assets minus ownership equity equals liabilities. And the third one is liabilities plus ownership equity equals assets. So the main purpose in this is just to kind of show that whichever way you arrange assets, liabilities, and ownership equity, they will all equal out to balance each other. So now I'm going to move on to a case study, a real life example of a balance sheet, and just kind of go over it a little bit and point out some key points. So at the top we can see current assets, then we move down a little bit and we see current liabilities and stockholders' equity, and we can check out some of the totals too. For 2015, the totals for assets were $64,747, and that was for assets. So now we can scroll down here and see that total liabilities and stockholders' equity is also equal to $64,747. And then we can do the same thing for the calendar year of 2016. We can see that it's equal to $83,402 there. And then we scroll down and see that this is also equal to $83,402. So in using this case study, we can see that assets are going to equal liabilities and stockholders' equity or ownership equity. They're both the same thing, and they will balance out. And once they're balanced out, then we can see that a company has broken even. And then here's a quick little example on how exactly we would find some of these. So let's just say that you have an ownership equity of 20. And you have assets of, let's go with 40. So using this top equation right here, you've got 20 as your ownership equity, you've got 40 as your assets, so you'd have to subtract and figure out what L would be. So 40 minus 20 is equal to 20. So your liabilities would then equal 20. And then that's just like a basic example. I mean, in actual balance sheets, you're going to be dealing with much larger numbers. But this is just pretty much one of the more basic forms of figuring out some of these problems.
The balance sheet is a critical document in understanding the financial health of a company. It's important to review the balance sheet by looking at each section and then divide those sections appropriately. For example, review assets and then look and see what are current and what are fixed. Furthermore, as we have seen, a balance sheet only shows a snapshot in time of financial health of a business. It's important to do comparisons over time so we can see how a business is doing.
After going through all this, we wanted to reference back and acknowledge some of the main takeaways we wanted whoever watched this to understand. The main takeaway we want people to understand is that assets, liabilities, and ownership equity all equal the same. So as you see here that I'll just restart it again.